from the United States Capitol's Congressional Auditorium in Washington, D.C., the Government Blockchain Association presents The Future of Money, Governance, and the Law.
So our next panel is actually going to be discussing global adoption, banking, regulation, and regulation. So I'd like to introduce the moderator, Chris Snook.
Got our slides? All right, everybody do me a favor, because I'm the last thing between you and lunch, and that's a tough place to be. So if you can do me a favor, just if you're willing to, stand up and give Kathy, Gerard, GBA Global, everybody a quick round of applause, and stretch your legs, because there's nothing more exciting than global banking. Thank you for indulging that. Your energy is as important as the panelists that I'm going to bring up here in a couple minutes. So let's go back in time a little bit. Imagine that you were this couple. So if you're by yourself, just you're the one on the right or the left. And you went to bed last night and it was 1720. And you were in the Potomac River and you went to sleep. And you put whatever bear skin or whatever you were doing to keep yourself warm over top of you. And you blew out the candle which lit your house. And you woke up this morning at whatever time the cock crowed. And you walked outside and you woke up today. And you walked down to this historic building that we are all pleasured to be in, and how would you feel? What would you think? What might you say? And if you could put anything together, what would you do? Because if you're a policymaker, this is probably how you feel right now, on a daily basis, regardless of which color tie you wear. And if you're an entrepreneur, this is you. You're fired up. You're going to disrupt. You're going to change the world. Here I come, baby. Only to have a regulator who doesn't get it bowl you over. Because if we want to talk about possibility, we have to talk about constraints. So when we might have gone too fast. No, we didn't. All right. So when we want to talk about possibility, we got to talk about constraints. And part of our constraints right now is this thing called complexity. I've learned about primordial ooze only recently because I wasn't that kind of kid when I was growing up. But primordial ooze is essentially where we all came from. And we have a primordial ooze 2.0 moment happening right now. And why I'm giving you this context is because before we start asking the questions of these panelists in a second, I just want you to have a different frame of where we are and what's important. Congress and progress are two sides of the same coin called innovation. We don't like it when we have to slow down, and we don't like it when others make us go too fast, right? If you're honest, you realize you don't resist change, but every single one of us in this room resists being changed. And so the purpose and the appropriateness of this building to discuss this topic couldn't be more apropos. So again, thanks to the organizers for that. Some of these things you may realize, but just to give you a sense, that couple that was 300 years, Gerd Leonhard tells us that in the next 20 years, you and I will experience that same change. If you actually sit with that for a minute, that's overwhelming. Because everything you know about yourself and your life and how you get through it today, calling an Uber, ordering stuff on Amazon, having it there in 2 seconds, the expectation level to not have to pull out your credit card when you pay at a restaurant, and last night, wonder why it takes 45 minutes to check out at the one we were in, those things are your 1720 blow out the candle, pull the bearskin over your body. That's today. 2030, 2040, you will feel like those two colonial souls walking into this building today. That's called exponential. And that's what we're dealing with. And we're trying to figure out how to make this turn this 100-year cycle, not with 1.7 billion people on the planet that weren't connected in 1900, but with 7.8 billion people that are. So it's a challenge, yes? Yes. We can't do it with the same things that got us here. We need digital ethics. We need to put human rhythms with our algorithms. If you haven't followed Gerd Leonhard or Rebecca Costa, I highly encourage it along with some other people. And we got to deploy empathy. Empathy is putting yourself in the other person's shoes and saying, what would I think? What would I feel? What would I say? What would I do? But here's one last piece of context before I bring up your esteemed panelists. I think you're getting warm, yeah? Yeah. All right. Right now, we can talk about blockchain and all the different applications you're seeing today. We can talk about cryptocurrency, and we're talking about one and the same thing in some cases and totally different things in others. The reality is that if this was a blue ocean, how many of you have heard the book Blue Ocean Strategy years ago? Right? So if this was a blue ocean, we are also dealing with red ocean conflicts, right, at the same time, because everyone sees the blue ocean and wants to race to it and reset the next world order. The golden rule is what? He who has the gold makes the rules. So for 5,000 years of history, gold and silver have been what we call Mother Nature's money, or some people call it God's money. Governments created money, somewhere right around the Roman Empire too, and have ever since then we've had government money, fiat, by decree. What enforces government money? In this country, an $800 billion defense budget. What enforces the people's money, which came out with Satoshi Nakamoto's innovation 10 plus years ago? The people's money was decentralized. The people's money was free market. And the people's money is governed by code. It's the only difference. But the challenge is that we have new actors. So we have these battleships. We have these aircraft carriers, the US, China. We have these big state actors that care about their people, that care about their positions, but have different viewpoints. And they're in this ocean, and they turn really slowly. But when they turn, get out of the way. And then we have these entrepreneurs, the green and yellow and red. And some of them are pirates. So we love to talk about the pirates. And then now we have a new fourth variable that's never existed before either, called corporate money. And they have all of us. They have more people connected in a stateless way than any other state in the world. 2.5 billion and plus on Facebook, as an example. So these are the factors that all of you are trying to understand, number one, before you can even move. So my encouragement is not to try and slow down, because you won't be able to. But hopefully with this panel that I'm going to bring up, we'll be able to help you calm down so that you can catch up. So the answer is finding the simplicity on the other side of the, and here's the upside. Gartner tells us in the recent book, The Real Business of Blockchain, another one I recommend, that $176 billion over the next 5 years is this industry. And it's 3.1 trillion 5 years after that. So if you're looking for a growth opportunity, you're in the right seat. Please help me welcome to the stage. You guys ready? All right. They're ready for you. So the Dame of Honor and the Honorable Ministry of Finance from the Republic of Croatia, Ksenija Cipek, please join us. Give her a hand. Dr. Sindhu Bhaskar of EST Global, and the infamous Dr. M from the president of the Impact Institute. So we're going to sit down and we'll start off with some questions. We're going to cover tax and banking in a very fun way. So we have the pleasure of having someone who has to deal with how do we tax properly. And by the way, tax is a word we all cringe at, but the reality is none of us have a place to drive our car or stoplights or anything without revenue, and revenue in the form of government is tax. So it's an important function. From your perspective, just what is the strategy? What is the Croatian strategy as it looks at taxing in the digital age, Ksenija? And then how does that need or couple with other actors?
So thank you very much. It's my honor to be here in this remarkable building, in this remarkable and distinguished country. So about Republic of Croatia, we took from this year, January 1st, 2020, presidency of the Council of the European Union. So as a member state of the European Union, we follow and actively work on the solutions about new challenges in new digital evolution. So one of them is certainly digital economy. So how to tax digital economy? Should we tax at all? So that's the questions that we have in Croatia also. So as we see recently, work of OECD on this matter, this is actually complex matter because many countries are involved in that. But tax on digital economy is not so complex. It's not so complex things. So actually, in Croatia, we didn't propose any law to tax digital economy, but our neighbors did it. For example, Austria or Italy. So we expect some international solution. And I should say that when I came here in United States, I have the time to read your Constitution, and one sentence is really beautiful and it's really important and said, one nation, one constitution, one destiny. And if you look at that from the perspective of taxation, I could not say we are all one nation, but we could be one nation for the purpose of taxation. It will be much easier for us, especially for the digital economy.
So I'd like to build on that. I want to build on that, and then we'll go to another intro. But a use case of that is recently, when you're talking about what OECD is doing, there's 137 countries that have essentially signed up to try and come up with a global framework around taxation in the digital age. The use case being that we can't disincentivize, if you incentivize a corporation to go somewhere because they're going to not have to pay tax, then the global economy, so you can't have these countries acting completely independently and have it scale possibly is the one argument, right? And at the same time, they need their sovereign individuality to stay true to Croatia or whoever they are. So what is the balance of that in your opinion?
Absolutely, we are all sovereign countries. So as we saw recently that some countries involved and is enforced the laws about digital taxation, some of them in European Union. But actually, in the same time, as you said, the OECD and also in the level of the working groups on the level of European Union, we are trying to find solution for international approach. Why is that? Because it's easier. But of course, every country has right to take some measures to tax digital economy. But as we see recently, one of them postponed the law till the end of 2020.
That was France?
France, yeah. Because the situation is that it's much easier, because what is the purpose of this taxation? Taxes are not punishment. Taxes should not be a punishment in any way. So we try to find solution which is simple, which is applicable. The laws, the regulation should be simple, should be structured, should be very easy to read from somebody. So it's much easier for businesses and for taxpayers, because our role as a tax administrations are also to be service to the citizens. So it's much easier if we have common approach. It's much easier for businesses.
Yeah.
But of course, it's happened that, for me, that's my opinion, time is crucial. If we wait too long, of course, countries will decide to take the profit which they think belongs to their country. So time is crucial. So we hope that we will find this year some international solution, and it, my opinion as an expert, will be that will be easier for everybody.
Absolutely.
So we're going to...
And since I'm just back from Davos, I would like to say that with regard to this one nation, yes, and the thought immediately goes to the United Nations as well. So we launched at the World Economic Forum in Davos the so-called Prosperity Collaborative. You can Google it, which is led by EY, MIT, and the World Economic Forum Council on Blockchain, which is one of the global future councils, and I am a member of the World Economic Forum. I incidentally put the blockchain among the top 10 there in 2016. The Prosperity Collaborative is actually a project which is aimed at defining taxation policies for all the nations in order to channel funds to address the sustainable development goals, and especially with the focus on the climate. So
it's a great segue, because Sindhu, you have a pin that is gorgeous, and it actually relates to the Sustainable Development Goals. And your work at EST Global, I'd like you to talk to us a little bit about what fintech composite banking and development is, because I think most of us realize that banking in its current state is broken. If we didn't realize that, it's broken for at least 2.5 billion people on this planet that are unbanked. But for those of us who are banked, we probably have a relationship that is not always wonderful with our bank, regardless of how much we use it. So you've been 32 years in I don't know how many countries over your career in banking, and what are you doing now, and how does it tie into this whole situation?
Well, thank you for inviting me, because I belong to the genre which is so battered and bashed up, because I belong to the banking zone. So the main villain is the bank right now, and everyone is trying to find a solution for banking. So after seeing all the drama being enacted in all the conferences, sorry to use this terminology, because we cannot say that all the principles of our classical banking are rubbish and they should be thrown away to gutters. It is not that thing. Yes, institutions are there, but the players, the actors are also there who try to make or break the institution. So I think in this situation, the biggest drawback is our self-centered actions. That has created a bad name for the organization and institution like banking. Banking has been and will always remain a big source of development. And that is why, after attending so many conferences all over the globe, blockchain, cryptocurrencies, and all that, wherein everything was centered to anti-bank bias, that banking should get removed and then everything is going to be fine. But let me ask everyone that, did we get rid of the principles of law of supply and demand from the cryptocurrencies market on the exchange? We did not. So what is the difference between cryptocurrency and our own banking system? Yes, players may be different, their intentions may be different, but right now, tokens are only source of private profiteering because they are not geared to the social economy, social wealth, national wealth. So that is why I am creating a banking system based on blockchain. I have applied for 5 banking licenses, which are in different countries. Everywhere it has been cleared. So it is not like any neobank doing the fund transfer. It is a banking with full stack of services. So you will have banking, you will have fund transfer, you will have trade settlement, you will have private banking, wealth management, lending, everything. Now, what I tried to do, that my banking licenses are in Switzerland, then Guinea-Conakry, Brazil, Senegal, and one more country which I will not like to disclose right now because it is in the final stage, and the last one is Puerto Rico. So I have connected all these banking setup on our native blockchain, which is created by us, so that I don't have to be slave of, again, big banks who talk of heritage and the problems in shifting to new technology. So ours is a new institution. I can shift to any technology. I can use any technology. And these are geared to the development. So these are development-centric institutions, because my term is composite banking. Composite banking is inclusive of all, like financial inclusion, banking the unbanked, and development. So we are working with Government of India, Philippines, different governments in Africa. And the development model is very simple, because till now, whatever our focus of development is, I can call it the aid policy, grant policy, subsidy policy. These are the things which we try to pass on to underdeveloped areas, thinking that these things will create a real development for them. But it is not the case, because money goes in, they consume, and everything is finished. What we need is that we need to create real centers of capital creation in those areas. Now, even if you create the capital, if you don't rotate the capital, you cannot create a sustainable and durable capital.
So I want to pause there, because I want to keep everybody understanding the context here and tie it into something that Dr. M, you're working on, and then back to you, Xenia. So there's been a resurgence of Giselle theory. Silvio Giselle was from the early 1900s. A lot of this negative interest rate policy that you and I wonder about or hear about is tied to that. The idea was, can you stamp currency and make it expire? The reason I bring that up is because banking as a service, right, is a real thing. We need to have the service of banking. Free markets of money we talk about, but we haven't had one in 100+ years, because when the Federal Reserve got created, we basically created a monopoly on money, and when we had Bretton Woods in 1944, we created a world where the dollar hegemony ruled, and so 90% of the debt in the world is denominated in US dollars. And yet there's all these other local currencies. And most of us go, I don't know about that, or I don't care about that. Now, as a policymaker, you should, because where we live today is where we live in this opportunity and threat of a free market for money or currency itself, where sovereign states, as small as the Marshall Islands, as an example that you're working on, can literally create their own currency. And why they would do that with crypto versus fiat only, meaning paper or just digital currency as it is currently, is because it's programmable and it's three-dimensional. So imagine that I could tax it, I could put controls around it so that it couldn't be used inside of this auditorium the minute I walked through it and my cell phone or a sensor on my suit picked it up. These are the things that are possible now with money that have never been possible before blockchain. And yet they require a whole new set of laws. So as we go back through, right, because I want to center it around what happened in the Marshall Islands, or what was the driving force behind the Marshall Islands creating their own currency, because you were kind of front row seat to that and are part of that. And then let's come back to Xenia, because I want to tie this back into you earlier about your international framework, and then we'll come back into the banking side and development.
No, absolutely. And so I would say, I still have the goosebump from your presentation, because I saw myself as part of the, maybe perceived as the pirates, because the reaction of the world when we actually started to and engaged with the government of the RMI to create this new currency was really, really very much resistance, from over my dead body to, never, to very much skepticism, and us being associated with the Robin Hoods that are going to, and even with the petro. So therefore, I can say, so blue ocean, yes. No piracy, from banking as a burden to banking as a service, indeed. Because if we are looking at the situation of this remote nation, they actually live among 1,000 islands, very few people, so by default decentralized, and they have this in their values and in their blood. That's how they evolved. So blockchain is enabling them to embed the values of the nation in the money, in this programmable means that is digital money, fiat currency on blockchain. And that's why the name of the currency is also the sovereign, so, or SOV. You can find more at the SOV.global. So when I say the value of this nation is, first of all, give back to its people. So every year, the annual money supply follows Milton Friedman's X% rule. So 4% is being released every year as money supply, which goes as a universal basic income to every citizen, as well as into funds, like the climate fund, because this nation will be the first underwater in the current situation, as well as in a health and nuclear fund, because we all know that the United States has performed nuclear tests in their waters, so they are suffering from that. So part of this will go back into the into that fund. So to redistribute automatically the money into the funds and to trust that they will go there, it's impossible without blockchain. So a lot of drives are there, and of course I can
yeah, so currency and velocity are two key things, and part of the challenge we have even right now is this debate around interest rates and how low they can go again, and how will we spur the economy the next time it dips. And the biggest issue that a lot of times we don't understand is that in the current environment we have a thing called a liquidity trap, which is when things start to get tight, naturally what do? We save. And so a government has to flood the market with liquidity, and it has to print more money to try and spur investment. But the emotional side of a human being is, I'm going to hoard, I'm going to save. The problem with the current fiat or any, it doesn't matter if it was crypto, but with fiat, the problem with it is I can't understand where it is. I don't know if it's under your mattress. I know if it's in your bank account, right? But, because I can track that. So with crypto, and this is to Scott's earlier comment about looking backward to go forward, in the early 1920s, European country, and I can't remember the name of it top of my head, but you can Google it, Silvio Gesell, they literally increased GDP and employment by 20% in a matter of 30 days by creating essentially a local currency that was not state, but it was like municipality, that stamped. So I paid everybody in it that lived in that town $1,000 a month or whatever, and at the end of that month, it was worthless. So what do you have to do? You have to spend it. And what happens at the first of the month? You get another $1,000, right? You say, well, I don't know if I like that. Well, most people live check to check right now and go deeper in debt every month, so it's not really any different. The difference is in crypto, what you can do is you could program that. So when you talk about banking services and wallets and things like that, we're talking about securing identity. We're talking about creating development goals that actually map to circular economies. But what we first have to understand is that why it doesn't work today the way that we may have thought. Why what Sindhu's saying may sound like you've heard that before and it didn't work last time, why should I believe you? But why I want you to pay attention to him is because we're not talking about the same thing. We're talking about what if you could program that very system and that very money to circulate itself. And
there are two things which I'd like to...
And one thing I have to say, because you were kind of pleading for the banks, is why does it not work today? It is because the banks are the pirates, because that's how they evolved, to actually predate and take everything. Just think about corresponding banking and how actually a small nation can transfer money from a place to another. If you have dealing between two banks, you have to go through a corresponding bank and pay fees there, and then you are allowed to exchange the currency and pay fees to the other corresponding bank, and so on and so forth. So it is really a conundrum, and it is preying on us, the people, or we, the people, given that we are here at the U.S.
So Sindhu, go ahead, pick up on your points, and then let's come back to Xenia.
Yeah, so again, of course, bankers are the biggest pirates. I do agree with you. As of now, that is what I'm trying to change. But see, the whole cultural psyche and the social psyche has also to change. It is not only that institutions need to change, players remain the same. So if we don't change our mindset, nothing will change. Even the new organizations will adopt the same rot that we are having today. That is number one. Number two, there is nothing new or say disruptive in this. Everything is very, very evolutionary, and even what we are facing is also evolution. And we are moving to new trends and new boundaries of technology. Third thing is that we always have to remember we are living in the age of political economy. So politics dominates the economy. We may keep on saying anything unless your political leaders are liberated, you cannot have a liberated economy. Number four, the theoretical aspect of development is that development only starts from above and revolutions start from below. Now we have to invert that model, and that is what I have tried to do with my banking system, that I am talking of creation of capital in underdeveloped centers, rotation of capital, and creation of durable capital. And that is why the development starts from below and only support or say guidance comes from above, so that we are not subjected to the tyranny of above or tyranny of government, as you people like to call it.
Awesome, excellent. So Xenia, let's shift gears, but stay on that thread of pirates, because part of what you have to do and your role is you have to identify who the pirates are, and then you have to try and bring them to justice in some way, right? If that's paying what they owe or putting them in jail. But there's challenges to that, and we spoke a little bit about the back. If you could write your crystal ball and you could say, you know, in Croatia, if I could write a piece of legislation that technology would enable at scale, what challenge would it promote? Would it help you with data? What would it help you do?
I think that that is actually true. When I'm listening to my colleagues, and I was starting to think about that, that actually paradigm between technology and legislation is shifting, is already shifting. So far, the main rule was always technology followed the legislation. That's not acceptable anymore. So technology and legislation should be compatible, and should be a lot of damage if we are not taking care as a legislator what we are doing and what is on the market that will bring us benefits. So third part is that we are now in the era that it's possible that technology has directly impact how the legal solution would be. And that's good, because we don't want any more administrative burden or cost or anything, or for example, the laws which are not, you cannot apply that in practice. So we cannot have only lawyers for the laws anymore. So it's very important that the part of the decision makers are the people who are deeply involved in the, not IT only, in the new technologies, as a blockchain, as a DLT, as any other new technology who could help us to bring us a better legislation. So when I'm talking about the challenges, of course, the main challenges is the digital economy, but a lot of other challenges. For example, today, tax frauds are very sophisticated, are very fast. So you cannot have a tax audit anymore today who will take, I don't know, 2, 3, 4 months, start after 1 month. So we need to be very fast. So the tax audit, for example, or tax administration should be fast, and first should have a quality data. And usually the biggest fraud is cross-border fraud. So we need exchange of information. In the European Union, of course, we have directive to automatic exchange of information, and still exist exchange information on request or spontaneous information. But from my point of view, that is too slow. So I started to think maybe we should have, because what is our role? We have the same role and the same goal, every tax administration in the world. So we want to increase compliance. We would like to stop any tax fraud. Third, we would like timely collecting the taxes. And fourth, which is very important, parallel goal and strategic goal, to be good service to the taxpayers and the citizens. How we can achieve that. So we should, as we have the same goal and same work in every tax administration, why we don't have direct access to the databases? So of course, it will be a legal framework, but why not? What will be happened? Nothing.
And there's actually, to what she's speaking about, not only is it something super relevant to someone in your position, but there have been pilots in the Middle East and India with what's called a multiple blockchain architecture. If you can think of a consortium where so the tax authority and the central bank and maybe the retail banks and then the exchanges and people like that are all nodes. So it's a permissionable but permissionless kind of blockchain consortium, and it's multiple layered to allow for KYC and things like this to be resold, which actually is a cost saving. So now you can not have to trust and not have to put your data that you don't want outside the chain, but through encryption, you can serve up Chris's KYC and sell it at a discount to what it would cost somebody else to pay for it to have it done again and have it not be redundant. So these things are out there in the wild, but we need to scale them. Let's take some questions from the audience. I think we've got a mic. We'll take 2 questions, and then please attack my friends here at lunch and ask them all of the questions that you want, because they're very smart. Remember that we have Paleolithic emotions, we have medieval institutions, and we have godlike technologies, and what these individuals are all trying to challenge and take on is, on a daily basis, is the nexus of those. So
But-
let's
but
take a
before the
question.
question, I just have to say to what the Dame of Honor was saying here, that we actually found a solution to this, to the balance between privacy and compliance. And so this is possible through blockchain, to how you design it. And what blockchain offers is a provable on-chain monetary policy with all those checks and balances there.
That is exactly what, in our banking protocol, we have adopted the same thing. Like in the whole software itself, we have created extra nodes for the regulators so that they can log in on their own and keep on checking it. They don't attack us that you did not follow this. We tell them that you did not do your duty. So that's how it has to go now.
All right, we got one question, and then we'll go to lunch.
While I don't believe banks will go away, there will be a different kind of banking. I'm just curious about the panel, is how in your solutions do you cope with fractional reserve accounting?
Is the question, do they allow it, or do they put different throttles on it? Can you clarify the question a little further?
All of the above.
Okay. So what is the relationship in your new models to fractional reserve banking?
Excuse me?
How do you approach, or how is your relationship in your business models to the concept of fractional reserve banking, where I'm lending out 20, 30x what I have under deposits and versus
As a digital bank, I think we'll be the first one to follow all the Basel III norms. So that gives you the answer. Because no digital bank or neobank, which people say, they are only busy in fund transfer. But when we are doing full stack banking, we are following all the classical banking principles with new technology. So we are following the same regulatory measures.
Excellent. Thank you, guys. Give them a hand. Enjoy lunch. Thank you.